about an 11.99 rate now to 12.99 depending on the deal. And that rate is good for 6 to 9 months depending on how big your rehab is. And if it goes over, you can't extend it. If you're in our loan a year, we're going to kind of look at it, okay, why isn't it selling, or why is it, something went wrong, and we're going to help you try to get out of it. But on our buy and hold program, we've lowered, we have a program with a permanent lender, and the way that works is we've lowered our fees to 2 points. Our interest rate is 7%, I think you were saying earlier, so we've lowered it to 7, and then we share the same appraiser with this permanent lender. So where that's huge is if you have a hard money appraisal done with us and you go to a different lender that doesn't use the same appraiser, you could get a different value. And we've had it happen where the value was $20,000 less, and that person had to bring 20 grand to the table just to refinance all of our loans. So that eliminates that risk of 2 different values coming in. So on that, it's 2 and 7. That rate is good for 2 months, and then it goes to 13.99. So it makes it gives you a little more motivation to get the rehab done quicker and refinance. So the permanent lender has already approved you, and as soon as you're done with the rehab, they can usually refinance you within 15 days. So typically you're in and out within a couple of months. So anything else I'm leaving out here?
And then they help you with other David, the other partner, the owner. Right. He was one of the biggest investors, and he was with Homevestors franchise. So they themselves have done hundreds of deals, and they still do, I guess.
Well, one of the owners of my company owns the largest Homevestors franchise, and that's the We Buy Ugly Houses guys. Now, typically we don't, talk about that, but they have over 800 rooms. So we have a good idea. We're like a second pair of eyes looking at the deal too. We're going to say, okay, you're getting into a good deal, or you're not. We'll let you know if you're not getting into a good deal.
That is key. We might get greedy, or we might not know, and all that kind of stuff. But when you go to the lender, who knows, they want your business. They want to lend you money. This is also a very important point. They want to lend money, but they don't want you to also make mistakes, because once you buy one, you're going to buy 10. And you're going to go with them because there is a relation. It gets easier. There might be other competitors, but once you know David, hey David, you know my all history, I have done it. I'm buying these 2-3 properties, and he'll just do it quick for you. But he will also suggest you that, no, I don't think so, Yogesh, you might be getting more aggressive on this. And in that case, if you know a little bit, you can talk. So they are like your partners, and that's what I like about them, because they are doing it themselves, and they have other good team of people.
That's it. It's building a team.
Yes.
You got to have your lender together. You got to have a mentor. You got to have contractors. Insurance. The whole team you put together, and then once you get that going, you can do multiple. 10 properties is not unheard of. In a year.
Do you Allstate?
Pardon?
Allstate.
Allstate?
Out of state.
Out of state. Typically, no. We do. The reason we don't do out of state is we like to keep our arms around every deal. We want to go out and physically see, especially on a flip. Now, on a buy and hold, we know you're going to be in and out. You're approved for permanent financing. We're not as concerned about the deal. But on a flip, we want to look at it and go, okay, has this thing flooded? Is this a good investment? For us, we want to make sure you're getting into a good deal. We do from Conroe to Galveston, to answer your question. So we do have a rep in Dallas and in San Antonio and Austin. So that's another same company, just a different guy. But those areas aren't as hot as Houston. I don't think. Maybe Austin is.
Austin,
yeah.
But everybody has their own views. And
right. Well, I'm familiar with this area, and I invest myself. I've got a couple rentals. I've got a flip going right now in Lamarck, and probably end up making about 20, 25 on it. So, of course, I've had a flip that didn't go as well.
So even the lenders have deals that don't go, as per even with the experience. So don't worry about it. Just do it. It's a numbers game. And get started, and then eventually we'll get into like, okay, I only make 25,000. Did you hear that? Only maintenance 25. It's average. It becomes average within what? 6 months, 4 months, 6 months.
Yeah, about 4 or 5. Yeah, about 4 months now.
Yeah.
So, yeah.
So that is the key. If you do a deal, you can make 25,000. Even if you make 10,000 in 6 months, and you can do 4 of those, it's good, right?
After the mortgage.
Yeah.
After everything, after all the expenses.
And I like the smaller flips, you know, something that sells for around 150. You have a bigger, for me, you know, a bigger group of people that can afford a $150,000 house versus flipping a $500,000 house for your first one. You know, I would definitely start with it. But you know, then as you were saying to me, you start thinking bigger and going into family deals. Yeah. And you can flip, you know, these guys are flipping these apartment complexes,
Yes.
you know, and making millions. It's pretty awesome. See what else am I missing now? I think that's it, right?
David, about the mortgage, how does it work monthly and quarterly?
Monthly, so you have a monthly interest payment. It's interest only.
Interest only.
It's an interest only payment, so you know you can write that off 100%. But yeah, and so you just pay us an interest payment of whatever the loan amount is. So you know, typically, let's say on a $100,000 deal, 7% would be around $700, $750 a month. So that would be your payment. Now, let's say you had a deal, you bought it really deep, and like I said, I see about 5 of these a month, and you've got enough room to pad in the repairs. So you do a contingency. Let's say the repairs are 20, you do a $10,000 contingency. Well, now you've padded your repairs. Hopefully nothing comes up, a foundation or something you weren't expecting. But you have, you can draw that money out after the repairs are completed, and you'll have, kind of a mini cash out built in, if the deal fits. So those deals, again, are out there. The way people are finding them are through estate sales, or just driving around seeing a vacant house and finding out who owns it and that kind of stuff. Without putting a ton of money into it.
Right. Lot of times these people have bought it in like 80s or 90s, and they are old now, and they have bought it at 100,000, but now it is 400,000. They don't have any loan on it. They don't probably need the money, so they say, okay, give me, what will you give me? They may not even know the values if they are not living there anymore. So things like that. So people go and take advantage of that, buy it at 200,000, go to David, hey, I think it is 400,000. I bought it at 200, I'm going to put maybe 50,000 into it, and then he would do 70% of the 400,000, which is around 280, 250, whatever. He might go low if he sees that there is. So it's good for you also, but you get all the 250,000 that you need. 200 to buy, 50 to fix, and you just make the payments on the $250,000. And of course, you have to first fix it with your money, and then tell him to reimburse, and then he'll go. The reason they do it here, because they go look at it. Have you done it properly? Are you making any mistakes? And they have good experienced eyes. They look at it as per the thing, and then you did it right, and then within 2 days they give you the money.
Also, I want to add, let's say you were going to go and just do a straight conventional loan. Well, on a conventional loan, you got to put 20% down on investment property. Then you'd have to finance the repairs yourself and the closing costs. So on that same scenario we did earlier, let's say you bought it for 50, you got to put 20% down, that's 10 grand. Now you got to finance the repairs, that's the 20,000, that's 30 grand now. Plus the closing costs, another 4 grand. So you're at 34,000 versus zero, doing a hard money. So yes, we did charge a little higher fees, but in the grand scheme of things, everything makes sense because it's all about the investment and the return on your investment. So,
And it probably took you 2 months to get that first loan in the first place.
right.
Came
right.
to you, got it done in 10 days, right?
Right. That's another thing I want to add. We can close in 10 business days or less. So, I've got a deal just happened this week. They had to close in 5 days, and it's typically these wholesalers, right, that make you want to do it. But the title company couldn't get title that fast, so we actually ended up not having to close. But that's a big selling factor when you're going to or a buying benefit. If you have a seller, if I'm getting long-winded.
No.
To a seller, if you can close in 10 days, they're like, oh wow, that's just as fast as cash. So That's a huge benefit whenever you're making
So we
offers.
actually put in our offer as cash. We say, hey, I'm gonna buy it cash.
Yeah.
So,
Well, what I've been telling realtors is you check the cash, and then in the special provisions, you put in buyer has the right to utilize a line of credit through a hard money lender. And they just kind of go put you, in a bunch of, they say, hey, I thought you were closing cash. Well, plus
So this is huge. If I would tell you, probably you may not believe it, but you heard it from the lender. So the next things we are going to say how to make offers, and even if you don't have cash, you can make cash offers, and we'll get into that. So if there is a seller who says, that I want to sell this house, and you can say, I'll pay you in 7 days or 10 days, I'll pay you little discount. I make 3 types of offers. One, low offer, close quick. Second is with the terms, and the third is a combination. So and then I tell them to pick one. So that way, but then you can make cash offers and you can close as if it was your cash. So that gives you an advantage to buy low, and that's the key about buying the properties, to buy it at low price. And that's why if you have a team like this who can do it, and they have been doing it consistently. And we'll also get into what are the different strategies, and one of them is wholesaling. So if you want to just buy, tell the seller, hey Naru, Mr. Seller, you want to sell your house, I'll give you money in 7 days, all cash. So he feels good that he is going to get the cash, you get it done, and then you find another person like Ranjit saying that, I'll sell it to you for 110. So you bought it at 100 and sold it for 110, you made your money in less than 30 days, $10,000. That's one way of doing it. But the point is you can buy cash. So you can buy cash and you can do it quick.
One last thing there, I might have missed it. You mentioned for first 2 months the rate of interest will be low,
it's a 7%,
and then it rises up to
13.99.
But
It's not retroactive. So let's say you go over a week or 2. Well, so you just pay that higher rate. Now if it's just a week, let's say you're waiting on, refinancing, we can give you a little leeway. But if if it goes into the second week, but you just pay that higher interest for that 2-week period, or however long you went over. And typically you went over because the rehab took longer for some reason, or there was a weather delay.
So what happens there is you buy a property, and if you do your due diligence properly ahead of time, so you're going to buy the property, you'll have contractors the day you close, or the next day you close, you'll have everything ready. We'll tell you how to do it. So you'll fix it in 4 weeks, and then before it is fixed, you can rent it. And I have done it, and I'll show you if you want. But so when it is time for you to make the payment, it is already being rented, and they have given you down payment for the deposit. You use that, and you show him that I have already leased the property, so he'll refinance it to you within 15 days. So you only pay the 7% interest, and the next refinance rate is at 7. So you are
I think right now that rates they may have gone up, but I think it's around 5.5 for the permanent.
So 5.5. Yeah, that's what I paid. So 5.5% interest. So your cost to do that is not much different anyways. So basically that's the name, right? The name of the game. You put a little bit and make more, and your returns on your investment. We are going to talk about it. It's very hard. So that's the key. So if you're going to rent the property, that's one way of doing it.
And then if you guys have questions, like I said, we're here to help you. You do more deals, analyze deals. So we can, you can even call me or email me. Say, hey, I've got a deal. What do you think the after repair value is going to be? I can look at the comp. I'm sure you guys can do it too. This is kind of determine, or if you're having a hard time saying, hey man, we can't figure out what the value is. I can even call the appraiser that's going to do the appraisal and say, hey, take a look at this. What do you think this thing is going to come in?
That is huge. That is huge. What I hope you are getting it. If you don't know what the value is, go hear it from the banker. He's going to tell you what he's going to lend you. So that gives you an added bonus or added advantage of lowering your offer or just going ahead with it or whatever. And you know how much loan you are going to get on that property. So plus he has all the resources. That's why I like working with Red Dot Funding or David, especially, is that he gives you so much more than just the money. But the point is, money is almost guaranteed. So you're going to get the money, but he's also adding to make sure that you're not making mistakes, plus you have all your numbers covered. So the point about getting the funding is solved, and also analysis is almost solved if you're using the right people. So that is a great bonus.
Cool. Well, thanks for
Thank you so
having
much
me.
for
Yeah.
doing
Yes.
what you do, and thank you so much for the support.
I'm gonna leave my cards up here. You guys want a card? And then my email and phone number. And my cell phone's on there, so I answer my phone.
Yes, that's also good.
Yeah, sometimes I'm out in the field doing deals, so don't feel free to call my cell phone. I try to take all my calls. Look forward to working with you. All right?
Thank you so much. Thanks a lot. So this is a good point for us to maybe take a break if you want it. We'll take a 5-10 minutes break, and we will come back in 10 minutes maybe, and we'll get into the types of real estate and things like that.
Do you want to break for lunch or?